All right, guys. Good morning. It's Tuesday morning, the 17th of January. It's about 8:38 in the morning here. Want to make sure that we get our week started off right. So we're going to take a look at the S&P 500. I might actually take a look at a few different stocks as well, just to to focus on the heavy hitters in the S&P 500. Before I get into all of this, as you all know, this is not financial advice. I'm not your financial advisor. You're responsible for your own trades, managing your own risk, doing your own research, and this is just my opinion on the market, of course. All right, so what I'd like to do is move on into the chart. And here, this is the S&P 500. I am on a 4-hour time frame, which means every one of these candles is half a day. And just kind of zooming in just a little bit, what I want to look at here is a little bit of indecision. We can see here that basically as of Friday afternoon, we had a green candle right there, and it's highlighted green because the red wave down here has crossed up. Okay, so a couple other things that I do want to make note of. The white and the yellow wave, and again, this is on a 4-hour time frame. The white and the yellow wave tried to get up into overbought territory, which is what I refer to as our bullish control zone. Didn't quite get there, but take a look at the green wave. It is pretty high. So one thing that I want to kind of reiterate maybe a little bit more is the fact that divergence can't be verified until you actually see like a significant move down, right? I mean, what I could easily say here is, yeah, we've got a lower high so far. And what I can also say is that we do obviously have a higher high here on our indicator. But that doesn't mean that we've got, hidden bearish divergence or anything like that. It doesn't mean that at all. All that really means, though, is that, the momentum is pretty great here, but the price action hasn't reached this high yet. But I think it's very premature to say that we actually have bearish divergence because we really don't. We don't have a confirmation of bearish divergence yet. So now here we are, and again you can see that we do have this little bullish cross here on the red wave, and the green wave is it's pretty high. And to be fair, we haven't seen the green wave get this high. Well, let's go ahead and mark it out here. We haven't seen the red wave get that high since all the way back here, right? And when we were back here on November 14th, price action was up here. We had some downward, it's kind of downward pressure, right? The other time that we had it all the way up this high was all the way back here, which again, we had a little bit of downward pressure. So are we going to get any confirmation of that bearish divergence? Well, that remains to be seen. But what I can say is the green wave on the 4-hour is at almost 96 right now. You can see here, I've got it roughly at about 95.79. And, all of the times it's been this high. Let's just go ahead and mark it out here. We're going to go ahead and mark out the times that we've seen it go this high. All right. So first off, we're going to start off. Let's go ahead and start right here. So right here at this high, right there, that candle, it was up that high. Another one would be right here. And another one would be right, roughly right here, right? And then kind of moving forward, we got pretty high here, but it didn't get that high. And we had a big cliff dive, of course. Here also, it got pretty high. It didn't quite get there, and then a big cliff dive. All right, right here, we had a move. It was that candle there. Moving forward, this candle right here. And then here we are now. Okay, so looking at all of these, I would say that it's safe to assume we're probably going to get a little bit of a pullback because that, again, is something that we have seen many times. Every time it's gotten up this high, we had a little pullback here. Let me change the color of that so you can see it a little bit better. Here we had a little bit of pullback. Worst case scenario, we had a little bit of consolidation for the better part of about 2 weeks. This one, of course, was very, very high, right? We had a big move off of that. Right? And again, this one didn't get that high. This one didn't get that high. But here, again, a little bit of a pullback, which had a little bit of a push up and then a larger pullback here. And this one had a little bit of a pullback. And, again, here we are. So are we going to get a pullback? That's a very, very good question. Now, what I want to do is I want to talk about what a lot of people are expecting to happen. And what I'm going to do here is I'm just going to kind of go to a 1 hour time frame. I want to take a look at the 1 hour time frame. I want to focus on a couple things here. So on the 1 hour, we've got the green, the yellow, the red, all up here in overbought, right? That is a warning sign, right? It's a warning sign that, like, hey, we should probably be a little cautious. We should be a little cautious. The white wave has actually crossed down. It's very hard to see, but if I zoom in a little bit, you can see it did cross down here. It's starting to move down just a little bit. But this green wave pointing up, the red wave, it's very erect right now. It's looking like it wants to point up. So what I'm sensing is we're probably going to get, maybe a little bit of a move down, but I'm sensing probably we're going to get maybe a little bit of sideways. We're going to get a push up before we see any kind of a push down, and then we're going to look at the potential for maybe a head and shoulders before we come back down to our target, which, right now we're only looking at maybe like 3,900 for the time being. But if I zoom out to, to see a little bit more of this price action here, I'm looking for a move down to roughly 3670, right? We'll call it 3,700. And on ES, that's probably going to be about a 3,700 hit. And the reason why I'm looking at that is, I'm still fixated for the time being that we've got 1, 2, 3, 4, 5. It looks like we've got a nice 5-wave move down, which usually when you have an impulse, it gets corrected in 3 waves. It doesn't always happen, but, looking at this, we have a nice little ABC, ABC, and then we've got this 1, 2, 3, 4, and then 1, 2, 3, 4, 5, looking at finishing off that C. So I'm going to change things up just a little bit here, going back out to a 15-minute time frame, just so we can see a little bit more subdivision here. And we're going to look at this from a different perspective. We've got an A, B, C here into this A on a lesser degree. So we've got that. And then we've got a little bit of a expanded flat here, going into the ABC here. Let's move this down here just to clean things up just a little bit. And then from here, I believe that we've got a nice little 1, 2, 3, 4, 5 here going into a 1. Call this a 1. And then we've got a 2. 1, 2, 3, 4, 5 here into the 3. Going down here into the 4. And then 1, 2, 3, 4, 5 to finish off that move. Do we have invalidation here? We do not. Right, so that's something that's important that a lot of people like to pay attention to, and I totally agree. This is important. Do we have invalidation from wave 1 to wave 4? And in this particular case, we do not. You can see right here that there is no overlap, so it's valid to look at it this way. And again, you can get the subdivision here from this low here. It didn't violate this low back here. So a little 1, 2, 3, 4, 5, 1, 2. And then, we've got, a move up here into the 3, 4, and then we've got a move up here to wave 5, which would complete wave 3. Nice little correction here, and then moving up into the potential for an ending diagonal, which, is kind of constructed. I'm using this, this top here and this top here. Still remains to be seen, but nonetheless, what it looks like is the potential for a 1, 2, 3, 4, 5 to finish this off. Now, what would that then mean? Well, is this a 1, 2, or is this an AB? Because of the time it took to resolve all of this, it took a lot of time to resolve this. I think we can all agree. It took a lot more time than a lot of us expected. My downside targets aren't nearly as low as they once were for the short term. So going back out to, say, a 1 hour time frame, let's just go ahead and kind of zoom out and take a look here. 5 waves down, and then what again we would have is that A, B, C up here, and then what I'd be looking for, this would be 5, 3, and then we'd be looking for a nice little 1, 2, 3, 4, 5, and this would go probably into potentially February, maybe even maybe a little earlier than February 13th. But what we have seen historically is February recently has not really been all that great, right? So if you go all the way back to, say, February of 2020, we all know what happened in February of 2020, right? So again, this was right here on, again, February 19th, February 20th, going all the way back here, February 11th, right in that range was, right about now, 3 years ago. Is that hard to believe that COVID occurred 3 years ago? It's pretty hard to believe for me. Back here in, January going into February, up here, February 12th, again, we had a decent top right here as well before we had, an interesting pullback. One way or another, I'm looking at these as pivot zones. I'm looking at a pivot that's going to be occurring in February. All right, that was 2021. We all know what happened in 2022. Going into February, right here, down here, February 23rd, from February 9th, a decent move down. So again, a nice little area for a pivot here in February. So now here we are. We know we're trying to move up into this February timeframe. My opinion is if we go up into this February timeframe, it's going to be a pivot for a move to the downside. But if we move down into it, I think it's going to be a pivot for a move to the upside. So again, we're going to have to take this one day at a time. I'm not taking anything super drastic. But if we get this move to the downside, which again, my target would be right around here at about 3670. Best case scenario, it's going to come all the way down here to the 1236, which is going to be at about 3590, 3600 roughly. We see a move up from there. Now, for the next couple days, I'm expecting a little bit of chop, maybe a little bit of upward price action, maybe even going into the January 20th options expirations, which, by the way, I haven't analyzed yet. But then from there, I think we do start, a nice little move down over the next roughly 3 weeks. And, that's really evidenced by all of the overbought indicators. Now, in a bull market, overbought can stay overbought for a long time. And a lot of times we don't realize when the trend has changed to really understand that we are in a bull market. I'm not saying that we are, but what I am saying is when the indicators stop working, then chances are the trend has shifted. Okay? So if the trend is shifting, we have to be able to adapt to change. So if we can adapt to a change and the shift of the trend, even if it's on a short time frame. I'm on a 15-minute time frame here, and what I can see so far, right? What I can see so far is, really each time we have the red, the white, the green, and the yellow all up here in overbought at the same time, right? When was the last time we had all four of those overbought all at the same time? Really it was, right here was probably the last time. And that was basically up here at this top right here before we had a decent move down, but it wasn't like super significant. So, when we see all of these things kind of get in confluence with each other, this is what I teach. This is where you start to add on a little risk for a pivot, or you start de-risking some of your assets. One great example, we bought Meta at 98.50 and I just recently sold it at like 136, 137. So that was, a 36% gain on just equity, just kind of holding on to it for a while. So again, if we get this, we're going to get this move down. But what does that mean longer term? Well, again, what I'm looking at here is the potential that we've got, a nice little 1, 2, 3, 4, 5. It's not clean. I will be the first to admit this is not clean. I actually do not like this structure, but this is what fits the best for the time being. And then we've got a little A, B, C down here into the B, and then we've got a 1, 2, 3, 4, and then kind of a truncated fifth, if you will. It did, I believe, make it slightly higher than this wave 3, but one way or another, it didn't thrust through. We had a nice rejection at the trend line, which, that trend line is important to recognize that that's really where we're approaching right now, which also would lead to, what's building on this ending diagonal. Because when you have an ending diagonal, what you really have is you've got buyers that are trying to push it higher, and you've got sellers that want to push it lower, but the sellers really haven't kicked in yet. But they're not allowing the price to go higher. So there is a fight that occurs when you're in an ending diagonal, like, potentially what we're in right now. And I keep saying potentially because really none of this is confirmed. This is all just hypothesis, all based off of, what I can, what I can see in the chart. And, of course, what I can see sometimes is wrong. But nonetheless, I would expect, potentially this last move up here, maybe even doing a little bit of an overthrow. That would be okay. That would be okay for right now. This doesn't really look super impulsive at the moment, meaning that we're going to be continuing up and out of here. If we can get up above, really like 4,020, getting above 4,050 would be huge. If we can get above that, then yeah, I do think that we're probably going to move up to maybe 4,300. And then basically I would start getting into stock buying mode, which I really haven't been in a while. But nonetheless, for now, this looks to be the structure. And then over the weekend, maybe, right, if we go for the next few days here, kind of going into Wednesday, Thursday, or something like that, over the weekend, potentially something is going to happen that is going to cause this to move down. Is it going to be COVID related? I don't know. Is it going to be vaccine related? I don't know. Nobody knows what the news is going to be. It could be Russia. It could be, it could be the U.S. Politics. It could be the debt ceiling. It could be all kinds of things. Inflation. I mean, there's so many different things that are going on in the market right now that people are trading against. It's a very news-driven market right now, which, to be quite honest, is not really a market that I enjoy trading. It's really not a whole lot of fun. But, if you can get something intraday that works really well for you, then, that's great. We try and take advantage of those. After we get this move down, just taking a look at the structure here, where would that take us? Take a dominant pivot low, dominant pivot high right here. Where's that pullback? Well, it's just a little bit beyond the 618. So where's the 786? So the 786 is all the way down here at about 3614. So really not a whole lot of confluence here. But from a trend-based fib extension standpoint, if we do see this price action move up a little bit higher, then that 1236 starts to line up with the 786 pretty nicely. If this goes even a little bit higher than that, then we get to that point where that 100 starts to line up with the 618. So I'm really expecting a move to the 618. If we get a move to the 786, that's great too. I wouldn't mind a move down here to the 786. That would, that would be quite nice to get a move down here. Again, I'm looking for February 13th being a major pivot point, which if you're looking from a time-based perspective, I've outlined this right here, and these vertical lines, they've outlined, decent pivots over the last several months. We had a nice pivot there. We had a nice pivot down here as well. So looking at this, I would expect there to be some kind of a pivot. We'll just kind of say that maybe that goes right there. This pivot goes right here. And then, this pivot, again, the lines aren't going to be perfect as far as the time goes, but, roughly we're looking at a move down here somewhere between February 9th and potentially February 14th. So be on the lookout for those pivots. All right. And then again, once we get that move down, we're going to take a look at least to the negative 236 because that's what we always look at for a 618 pullback. I'd be taking a look also for this negative 382, which is right here at about 43.55. So if we get that move down to 3,700, I would expect a move up to 42.55 or 43.55, depending on how we go down. Okay? And when I say that, what I mean is if we go down with a lot of force and if it is very hard and very fast, and especially if we do happen to have any limit down days, I'm not saying that's going to happen. I think it's actually probably low probability that we have limit down days. But if we do, I'm not going to be buying at the 618. I will want to wait and see what the reaction looks like down there. But if we complete a 5-wave move down into that 618, it's really a perfect place to be buying. And then, of course, your invalidation is going to be at these low down here at about 3,500. But again, if we go down with a lot of force, our target is actually going to be much, much lower. We'll be looking for a move down into, maybe 3,400. I don't know that I'm ready to say that it's possible that we get to 3,300, especially by February 14th. That would be more along the lines of going all the way out here into like maybe June or July. But what I'm expecting, again, a push down here into this point, and then a push up into this area right here, which if I take this out just a little bit, I can tell you roughly when that's projected for, April 14th. So again, possible that we get a move down here. Crypto does have me a little bit, apprehensive about being too bearish on the S&P 500, just because of the big move that it did have after hours on Friday. So the stock market closed, and then shortly thereafter, crypto decided to, just be ridiculous, which is great. But, I do have to be just a little skeptical on the S&P's move down here. But again, if we can just move a little bit sideways here for a while, I think we're going to get that move down. What I want to look at, though, I want to take a look at Apple, Microsoft, and Amazon. So if we take a look at Apple, I'm going to take a look at it on the daily. All right, so taking a look at Apple on the daily, let's just take a look. I want to focus on the indicators, right? So what we've got right here, and I'm going to try and clean up some of the stuff that's there. What we've got on the daily, we did have a buy signal down here, right? And we had a move up, and I did get into a little bit of a short position on Apple. Might have been a little premature. On the daily, things look like this daily is going to roll over, and it's going to come back down here. We're probably going to get some confluence on the daily with the green, red, white, and yellow wave. It looks like it wants to happen. This white wave and the red wave are still pushing down pretty significantly. The other thing that I want to, also focus on here is the fact that we've got, this guy right here mixed with this guy right here. And it looked to me at the time that we had a nice little A, B, C, D, E, and then we're continuing down. So this pullback here is really at a level that I wouldn't want it to go too much higher. Again, it could. It's not going to hurt that bad if it does. I think I'm down maybe like 3% on that position. It's it's quite all right. So again, just being honest. It's always nice to be open, honest with everyone here. So, getting a move past this 135.17, and it looks like we're at about 135.30 at the moment. This is probably going to open some doors, maybe up here to about 137 for the duration of this week. But on lower time frames, let's take a look at Apple. So we've got the green and the yellow wave that are up here in overbought, right? If we take a look at this, we do have a touch here and a touch here. We're going to be trying to push up and through that, right? So, watching that. But again, this does look, kind of similar to the S&P, where we do have a little bit of compression here. We're starting to get higher highs and higher lows, but it's in a compressionary fashion. But again, if we can get that move up, then I do think that probably would open that door to that 137, 138 range. And which would be in confluence with this little consolidation that we had right here, which was resistance. After we kind of broke down below this consolidation, it did become resistance. So we're approaching it again. We'll have to see what happens. Moving on to Microsoft. Oh, yes. Good point. Good point, Joseph. Let's see here. Looking at Apple, you can look at this as the potential for an inverse head and shoulders. So that would be outlined a little bit like this, where we have this left shoulder here, we've got the head right here, and then we're creating this right shoulder. What I will say is I don't particularly like that the neckline moves down like this, but this does look like it could work out, which if it does, right? And I think it's important to recognize that it could work out this way. If this inverted head and shoulders does want to work out, what I'm going to do here is I'm going to use my fib retracement. I'm going to take this dominant pivot low, and I'm going to go straight up to the neckline, which is right here. That's where our neckline is. And I'm going to try and get it as close to perfect as I can. The target is going to be a 100% expansion on the size of the head from the neckline. So that's going to be down here to the -1. And that would take Apple up to 145. All right, so if we do see, for example, the S&P 500 get that pullback into a wave C, Apple is probably going to look a little bit like this, going to come back down here, going into, again, the end of January, maybe February. We'll have to wait and see how that goes. right? But if we can maintain above this neckline here, then I do think it's very possible going into maybe into February, maybe into March, or that April timeframe, that it would go up there to that 145.59 area. So I guess, excuse me, from a trade perspective, I think the upside actually looks pretty good on Apple when you look at it from an inverted head and shoulder standpoint. Microsoft, Amazon, then we're going to call it so that I can get ready for the market here. So Microsoft has a little bit of a gap down. From the hourly wave that we can see here on the Wave Master, we had a buy down here. We had the green, the yellow, and the red down here all in oversold all at the same time. We've had a nice bounce off of that. We had the green and the yellow get up here in overbought all at the same time, and we've just been kind of consolidating ever since. So from a construction standpoint, it just kind of looks like we're probably going to be in for a little bit of chop. We do have a low here on the green wave, and then we had a lower low here on the green wave as well, where we had a higher low on the price. So, we'll see what happens here, but Microsoft does have a little bit of a gap down. Amazon. Okay, so I need to clear this out because we had let's see here. Yeah, we had a really good day on Amazon not that long ago. And so I was providing a little bit of commentary on how that worked out. For Amazon, however, things do look a little bit different than Microsoft and Apple. So on Amazon, because of the big day that we had back here last Wednesday, we do have the red, the yellow, and the green all up here in overbought all at the same time. So potentially Amazon has a little bit more upside, but I believe that Amazon is going to be one of those that's probably going to lead us down if we do see that pivot. Amazon, I believe, would be kind of in dip buying mode. Watch to see what happens on Amazon down at maybe like 90. Maybe you see a gap fill right here. There is also a gap down here by 86. I don't think that one's going to get filled, but I would expect that this $90 gap is probably going to try and get filled. Again, we'll have to wait and see what happens there. But what I will say is that we do have a couple things here. Things that a lot of people don't pay a whole lot of attention to. We've got this V shape right here mixed with a cup, right? And so what a lot of people refer to this as an Adam and Eve formation. And once we get up here to this area, usually what you see is a little bit of a correction before you see a move to the upside. And that's really how like a cup and handle would work. And for a cup and handle, you would want this to come down to the 382 or the 50. So let's just go ahead and measure it. If this is a cup and handle that we're creating here, right? A move down here to 91 or to 89, which again would be right where that gap fill would be perfect. And then we could then potentially see that move up to, prices higher than 100. Again, that's potentially what could be going on with Amazon. Take a look, do a search here for Adam and Eve, do a search for cup and handles. I wouldn't necessarily say that I'm a pattern trader, right? I'm more of an Elliott wave and a corrective trader. When I trade options, I'm more of a breakout trader. So I don't give a whole lot of weight to patterns because they do fail quite often. Just be careful, right? Be careful with that because we are overbought, and it's fair to say that we're overbought. We also, excuse me, I do want to focus one last moment here, taking a look at the dollar index, right? So the dollar index, kind of pushing down a little bit, which is, causing prices to move up. I would expect, though, that we're going to reach a bottom here very soon. Taking a look at the weekly, right? This is the weekly. We've got the white wave down here in oversold. Now, the dollar index is not going to move fast. And if you've traded Forex, you know that it really doesn't move fast. It has moves, but the moves aren't that great. So the dollar index is going to take a while, right? Probably longer than you would expect to start to see a pivot. But again, similar to what we did for the S&P, let's take a look every time that the white wave has gotten down this low. All right, well, again, we're going to do our little thing here where we get our little eyeball out, and we're just going to kind of take a look. So we got down this low back here, right? And it took several weeks for it to pivot. We came back down lower, and that would be right here. And then, of course, that's what started a big move to the upside. And then all the way back here, we saw this move down here, and we saw a decent move up. Going back, again back here, we saw a decent move up. So really, each time, each time we've seen a move down this low, right? I'll venture to say that this one is close enough to call. We've got this move here. Each time we've seen all of these, well, sorry, not all of these. I'm really just looking at the yellow wave and the white wave. Each time they've gotten down into this territory, we have started to see a move to the upside. Now, this one is kind of an anomaly. It took a long time, right? And we could be seeing something like this going on, where it kind of grinds down for a little bit, but eventually it's going to see a significant move to the upside. I think the longer that it takes to pivot, I think the bigger that pivot, the bigger that move is actually going to take. So once we do see that pivot, I do think that the market is going to see, kind of a continuation to the downside, if you will, which, would go into, the end of 2024, maybe even into 2025. My target is currently 120, but the longer that it takes, right? We were looking at, the bear cycle ending in 2023, but the longer that it takes, the further out this is going to go. Looking at this, we could be taking a look at this coming down a little bit further, maybe even down to 100 before it continues up. And this could go into April, go into May. It doesn't have to go to the top rail of this channel. I mean, certainly it would be best if it did, but it doesn't have to. But once we get that pivot and move to the upside, it's going to take a while for it to get there. But when it gets up here to this area, that's the time that you should be taking your 401ks and putting them back into the markets, right? So, not that I'm a financial advisor or anything, just saying that's what I would personally do. If we did see that move up to 120, that's where I would expect there to be a dominant pivot from the market to go from bearish to bullish. And I can't tell you where we're going to be when we reach that point from an S&P standpoint, but what I can say is when we do get there, it's time to start layering back into the market a little more heavily. All right, guys, if this video did help you in any way, shape, or form, you know the deal. Like, subscribe, share. If you need access to our Discord, you can find all that information on BitDoctor.org, which will give you access to education, the Wavemaster Indicator, our trades, and all of that, where we have trades almost every day. And I've gotten back into the swing of crypto. We've had some big wins on crypto. If you haven't checked out the Twitter account, you can find sort of our trade results on my Twitter account. That would be the BitDoctor1 on Twitter. And of course, last but not least, wherever you are in the world, I hope you're having a good day, good night, and a good evening. Take care, everyone.